Good morning, everybody. Happy Monday. You made it through the weekend. We got a lot of things happening this morning. The market is down. Stay-at-home stocks, some of them are up. Reopening stocks are down. Vaccine stocks are up. We had a lot of developments over the weekend. We're going to talk about it. We will also talk about what happened on Friday, especially Friday's close. We had a lot of fireworks at the close on Friday. Talk about that. Tim Quast will be on the show today, as he is every Monday at 8:35. We'll get to questions from our chat. Good morning, everyone. Good morning, Alex, Dino, Matty Ice, Raul, Ryan, Tommy, Super Spackman, Hans, K, Duncan, Dave, Igor. Good morning, everyone. Hope you all had a great weekend. Let's start the show.
This is Pre-Market Prep with Joel Elconin, Dennis Dick, and Spencer Israel.
Joel's with me now. Joel, good morning. Good morning. How we doing? More importantly, how's the market doing?
Yeah, let's go to the S&Ps. Let's go to the screen share. Good morning, traders and investors around the world. We got a lot to talk about today, as Spencer said. A rocky close on Friday. That led to some rocky opening. We traded as low as 45.26 and a quarter. That's not even your December low. Got us near our December 6 low at 24.75. That pre-market high looks pretty safe for now, up at 21.50. We're down 57.5 handles at 45.52.5. Crude, one of its worst bars in a long time, down 337 and 67.36. Gold in the red by 550 at 17.99.20. Silver going the same way, down 21 cents at 22.32. Bitcoin down but not out, clinging to that 45K level. Ethereum futures, they're down 65.5 handles at 37.73.50. Let's bring in Triple D. Triple D, I know Friday was a long time ago, but when I did my write-up, I said a win for the Bears. I mean, that Friday's bad price action, a new low for the week, a new closing low for the week on a quad witch. A win for the Bears, and the Bears are winning now as we're down 58 handles.
I mean, it was a win for the Bears and the SPY. And again, you've got to be looking outside the SPY.
Yes, sir.
Gail keeps reminding us outside the show there that we only look at SPY, even though we don't. But we're looking here. You actually did see a nice rally in the growth names. So there was a lot of rotation on Friday. So it was a good name, a good day for actually quite a few stocks on Friday. Kathy had a great day on Friday. You know, the key reversal, ARKK kissing the lows of the move, and then turned around. They started buying it, and they wouldn't stop buying it. You could feel it too. I tweeted out again. You could feel the growth names just off the hop. That first 10, 15 minutes, man, tells you a lot. And I was like, they're not taking it down. They're not taking it down. And then they started buying some of those growth names. And I was like, okay, you know, there's a trade here. And it was a good one. And our ARKK really ripped higher. So actually, you could say Friday was a win for the Bears if you were just looking at the majors. But when you looked down inside, there was a lot of names that had a really good day on Friday. So that gives me a little bit of hope. I know when you're looking at Apple breaking down new lows on the move, and you're looking at, you know, a lot of other names breaking down new lows on the move, it doesn't feel like it. But at least there was some rotation into some really beaten down names. So they were selling some winners to buy some losers on Friday, which is indicative of more bottom forming than top forming. With that being said, you get all more news over the weekend. Sports are shutting down again. I mean, Omicron is here, and it is everywhere, and it is spreading fast. You know, we got Elizabeth Warren. I mean, big names coming and now getting COVID. And it's like everybody is vaxxed that's getting it. So it's very disappointing, not just from a market's perspective, but it's disappointing from a personal perspective here, where, you know, we've got the majority of the population, at least in Canada, I think it's 83% or 85% vaccinated, and we're shutting stuff down. They didn't allow fans to go to the Montreal Canadiens games. They've now shut down cross-border sports. There's no Oiler games this week. It's like, here, you know, the vaccines were supposed to get us back to normal, and it feels like we're going backwards here, and it really is disappointing. The one, thing that I still have hope, which is what Dunk and Dave's saying in the chat, which I hope so as well. It doesn't appear that Omicron is killing that many people. So if that is the case, maybe, we can get past this in that way, that the variant, the Delta, the COVID just weakens itself to a point where it's not that dangerous anymore. Because it feels like from a vaccine perspective that we're going to just continue to be chasing this thing, where it's going to be a new vaccine, and then there's going to be a new variant, and we get another vaccine, another variant, and I just don't know how it ends.
So there's two things at play here, right? There's perception and then there's reality, right? And the reality is, like you said, Omicron, the data just seems to say that it's not as deadly as the other variants, and people who are getting sick aren't getting as sick, at least those who have
That's good news.
Those who have the vaccine. And then the perception, and so that's good news, right? The perception is, like you said, also it feels like we're kind of going backwards, or at the very least not going forwards, which is kind of the same thing as going backwards, right? And so whether it's your sports leagues canceling games, whether it's you and your family, your friends canceling holiday plans or travel plans or whatever, or lockdowns in Europe, that the perception that it's not getting better, even if it is getting better in a way because the latest variant is not as bad, the perception that it's not, the perception that we're going back to the way things were last summer 2020, and can create a different kind of atmosphere, right? So maybe the market is trying to navigate those two things right now, where it's like, on the one hand, the people who are vaccinated are getting through this thing okay. There aren't that many people dying, at least relative to the previous strains. And on the other hand, yes, but there's cancellations, and are we going back to remote work and remote school and everything? And I don't know.
I hope not. But when and I'm in Ontario, obviously, but when I picked up my kids on Friday from school, they handed us all their indoor shoes, all their indoor stuff. They're like, over the holiday. They also handed us rapid tests, free rapid tests for the kids. And you just keep thinking, you're like, it feels kind of like we're on the Christmas holiday right now, and it feels like they're not going back. And that is so epically, and I mean epically, disappointing. And to a certain extent, it does feel like science is not helping. It's not that it hasn't done as good as it should have in this, because it's disappointing that, here we are a year later and the majority of the population is vaccinated, and we're talking about going back in a lockdown. It's like the vaccines were supposed to get us past this, and Fauci can say whatever he wants on CNBC right now. But I mean, the majority of people are fed up with it. And
that was the turn that I was.
And I'm fed up with it too.
Yeah.
So when this first started, take us back a year and a half ago, where we knew this was coming. I mean, we talked about it on the show. You knew it was coming, and we were prepared. I was like, we can bunker down and stay at home for a few months. It'll be okay. We're almost 2 years into this. I mean, the times to just stay at home. It's like, I'm sick of it, and I've flipped now to the other side. It's like, I'm vaccinated. They're telling me now in Canada, Ontario, now you're down to 10 people over Christmas holiday. You can only see, it's probably going down, that there's this immediate family next. I mean, in Germany or whatever, they're locking down over there too, and people are protesting. And you know what? Before a year ago, I'd say, well, we don't know what we're dealing with. Well, we do kind of know what we're dealing with here now. And I think people should be able to make their own decisions. So I've just kind of flipped that. I think locking down is brutal at this point in time. I think shutting everything down is brutal at this point in time, because you know what? We're 2 years in, and we've relied on science to get us out of this lockdown stuff, and the science is chasing this disease. The science is behind. The Faucis are behind everything. They can't keep up with it. So we're going to get a new vaccine. There'll be a new variant. We get a new vaccine. There'll be a new variant. So it's just very epically disappointing that there's the whole world working on this problem, and we're still in the problem 2 years later. It's like, the science isn't as smart as as the media is saying it is, and it's really disappointing.
Went to a play this weekend.
Awesome. It's nice to do stuff. We can't do that in Ontario now. It's all closed
I'll
down.
go to sporting events.
Can't do that in Ontario.
I'm mask it up. It
we
is
mask
what
it up.
it is.
We still can't do that.
Yeah. Yeah.
Are you think you're going back to that? Do you guys think in Michigan? Do you think you're eventually going back to
No,
where we're going right now? Like we're 2 steps ahead of you right now in Ontario. I don't know if we should be.
Dennis, there's no political appetite for that in the U.S. So no.
There's no political appetite for it in Ontario either. They just do it. So in Germany, obviously, there's no political appetite either because they're protesting it.
All right, whatever.
You got to understand, like I do get from the government perspective, people think it's a conspiracy, and I don't believe that whatsoever. It's a conspiracy for control. I don't believe that. I think the government's just going to err on the side of caution. Like they don't want to be, where, it's us, we said open up and then people died. They're erring on the side of caution. I am hopeful that this Omicron variant, there was a doctor on Hockey Night in Canada, because I watched Hockey Night in Canada for the last time Saturday night, but what he was saying is that this Omicron variant could be the best thing to happen because it appears to be less deadly, and maybe it becomes the dominant strain to knock Delta back, which is obviously more deadly. And maybe, all of a sudden it is just like the flu, and maybe we can go about our business, and maybe herd immunity works against it. I don't know. I don't know how this ends. The market is obviously scared about it. It's an Omicron sell-off today. We're saying, a week or two ago that it was a Fed sell-off, which it was. Today, it's the Omicron now starting to come into these markets.
Credit to Joel, because Joel was saying, we were talking about this weeks ago, and we were saying, oh, it's not Omicron. It's all the Fed. It's all the Fed. And Joel was never quite convinced of that fact. Well, Joel is getting his due this morning.
Unfortunately, we can move on to this to cover some stocks, Dennis. But that opinion that that doctor had on a Hockey Night in Canada, that's Lisa's opinion.
That's hope. That's at least hope.
Yeah, and she's
give us hope.
She's been pretty I mean, when things and when I pulled out of the office in the middle of February, and she was calling the governor's office and the head of infectious diseases at all the major hospitals, and they're like, we don't know what to do. Then that's that I don't have that feeling. I just have the feeling that.
Good.
Yeah, that man, this is crazy. I mean, it's like everything was going to be better by Christmas. It's the holiday season. There's just so many things going on. But what we got to do is just stay focused here on the markets, right? And we got to decide whether or not, Dennis, you made a great call in Robinhood on Friday.
The growth names got bought.
Yeah. But now, what do you do now?
I think you're buying the dip on those names.
I think so too.
I think so too. I think you're looking at Robinhood down 4% here today after it wanted to reverse on Friday. Now you get the Omicron sell-off against Robinhood. This isn't bad for Robinhood. If Omicron, people are trading from home. It's that's actually a positive. So you know what? I actually do think you're buying the dip on Robinhood. I'm actually writing it down right now.
But can I hold on though? Because every single beaten down stock was up on Friday. It felt like it, right?
It was.
Right.
Yep.
Is that a good thing? Is that what you want? I mean,
I think so, because those are the riskiest. We saw. I think it is exactly what you want, Spence. It's a great question. I think it is, because those are the riskiest stocks that the money has been coming out of, and the money wanted to put more risk on Friday. Even despite the S&Ps making a new low, the market went risk on Friday. Sneaky risk on, but it did, buying Kathy and all the beaten down names. And those names are getting hit here this morning. I think those are the names, at least from a short-term trading perspective. I'm not saying I'm putting Robinhood in my long-term portfolio. I'm not adding anything to long-term portfolio right now. Yeah. But in the swing trading portfolio, day trading portfolio, you now have a defined out. I would stop out on Robinhood at the low of the move, 1707. So if I'm paper trading, I'm buying at 1827 right now, stopping out at 1707, hoping it can get back up there to try to get above that 20 and then start to up again.
Yep,
but it's oversold. I can risk $1 here right now, $1.20, which isn't bad. But there's a lot of other names, same setups here. So I think you're leaning out on Friday's low. So again, when you were trading, I'm going to tell the new people out there, it's all about risk management. You've got to have your out, know where your stop is. Put your stop first in your head, mental. Don't use physical stops if you don't want to, but know where your out is, and then go and see where you need to be to make the risk return make sense. Start with your stop. So on Robinhood, I'm starting with the 1707. I'm working from there at 1827. I like 2-to-1, so it'd be like $1.20, $2.40. You'd really like it to be up over 20, 21. So that would be the trade. I think, there's a shot here. They could make new lows, stop you out. Anything can happen, but I kind of like the setup here.
And I want to look at both the indexes. Here we are. I mean, we're still not even back at the lows for the month. Remember, we started the month at the $4,500 level. Trio lows down there. We had the snapback rally. That new all-time high on Wednesday was, or excuse me, on Thursday was pretty incredible. But you look at that. I'm going to start adding the IWM to the daily rundown. I mean, that is still holding monthly support. It's been a trading range and it's at the lower end. Yeah, it's down 374 here, but you still look at that like 210 area and support is support. So this is kind of what is good for the market, right? Not to have the all the gains come in the top stocks, to be a little bit more diversified. So I think it's an important day for the Robin Hoods, the ARCs, these stocks that had those rallies. It's because it's always important, the people that are wanting to get long and they got to buy into a rising market. Let's see if they step in on the pullback here. New low of the move on Friday in Robinhood and got up in the 19 handle, down 80 cents at 18.30.
All right, so Dennis picked one that had gone up $1, but what about like Teladoc here that went up $12 on Friday?
And we talked about this one on Friday too, if you rewind the show, that I was like, it's massively oversold and it didn't make a new low on the move. And yes, I would be buying the pullback on a stock like this. Again, though, you're too far away from it now, though.
That's what I'm asking you.
Yeah, my stop, you almost can't do it. You need a bigger pullback because you got to go down to the 87. You're risking 10%. I don't really want to do that. Setup was much better on Friday. It got down to 92. Maybe you take a shot, but I think that 87 is solid now. You kind of got a little double bottom. The thing massively oversold. We talked about this on Friday, saying this has given back its entire COVID gains. It was the COVID play, and it gave the entire thing back. Not even like all of it. Where it was trading in when this thing started was $100, and it's below that now. So is this one massively oversold? Epically, eternally oversold. And I think there is a bounce here in some of these names. I actually, on some of these Kathy bought names, I think there's an opportunity on some of these names.
So what about the one that's bucking the trend here this morning is Zoom, because it was up Friday and up again this morning, 206 now.
Zoom is up because it's obviously the lockdowns are talking about. So you're seeing a little bit of money fly into that trade here again. I absolutely just don't like Zoom, though. It's not the stock I would pick on. Maybe on Friday, but again, you had a huge move. Now you get the follow through on this. It's just too far away. So my stock 174, 206 is too far away. The problem is Zoom, I still think, is heading much lower in the long run, too, because I think there's so much competition there. So I don't think this is as disruptive as Kathy would want to believe. So I think there's better disruptive plays in Zoom. So I like some of the Kathy stocks. This is one I'd stay away from.
Yeah, trading at the highs in the pre-market session, right, at 207, and there's nothing in there. I mean, if they really want to run this thing today, I'd give you your next target, the 2-day run. Let's see, 207.30 is where we're currently trading. If you're looking for another target on the upside, I see room up to 211.50 and then 21.41. But got to keep that momentum off the open. You don't want to see this, trade up to 208 off the open and then come back, at 205 or 206. But looks strong now, looks bid. Next target, 211.50.
So, Dennis, is that your broad-based play for the day? Is you would buy? So most things are down this morning. You would buy the stocks that were
strong on Friday.
On Friday with a stop at Friday's low.
Yep, that's kind of the broad-based play that from a swing trading perspective. And again, remember the majority of my trading isn't swing trading, it's scalping, it's day trading, it's little momentum plays, it's opening inefficiencies, all the stuff we've talked about on our webinars. But a lot of people like swing trading, so we focus on that on this show. And yeah, if I was setting up swing trades here, I'd be buying the stocks that were strong on Friday, buying the dip on them. Zoom is not giving you a dip. I don't buy the rip, I buy the dip. So that's why I would never even be looking at Zoom, because it's not giving me that opportunity. But stocks that were strong on Friday, looking at those and stopping out on those Friday lows. So you're getting a pullback even on ARKK in itself. You're pulling back $2 here. Yeah. Okay, it starts to get a little more interesting. Again, it's a little farther away. What was the first one we did? Hood. It's a setup I like better in Hood a little bit too. So again.
What about like a DocuSign, which went up? What like?
Yeah.
It's
Again, these aren't long-term investments though, because a lot of this stuff is still really expensive. DocuSign, I would stop myself out higher than that. I wouldn't go down the low of the move. I'd maybe, if you went to Friday's low, you probably want to go to like Wednesday's low because it's close enough. 142, it's $10. I don't know. How are you approaching it, Joel? Like, I mean, do you like these setups, like buying the ones that were strong on Friday on today's weakness?
Yeah.
If everything continues to roll over and we end up down 2,000 Dow points today, it's going to be a different story. But I mean, I'm assuming that the majority of the selling that happened overnight from Omicron may have already happened here. So I actually am looking at buying the dip here today. I might be wrong. I've been wrong lots of times, and we might be wrong. And that's why we use stops, at least from a swing trading perspective. So.
I mean, Kathy, it made the new low, did make a new low for the move. It's pulling back. I would just be looking at this to see we're trading down $1.97. I mean, this ETF is pretty technical, and I'm just looking at the two highs, 97.07, 97.51. Then you had another one here just under 97. So I don't know if about trying to buy if you buy the dip. You got a long ways to lean on the low from yesterday, but maybe trying to sing on if and when if it can clear that 97.20, 97 and a quarter, then there's room up to 100. So buying a little bit of strength. I think also let's just talk about the market dynamics from Friday. I mean, you did have the quad witch. It was a wicked day. Up and down and all around, and sellers, got a hold of the market. As I said, it was the win for the Bears. So Friday's close up there at 46.10. I mean, that's something that really like to recoup that and get back into the 4,600. If not, I don't know if I'm just stepping right out here at 45.50 as basis. The S&Ps are the SPY. I mean, you have your clear area support is down at 450.
I think you're staying. SPY has not sold off, so there's a big difference between buying the SPY dip here and buying the dip on some of those growth names. We have not had the correction. So exactly what Gil was talking about when he was on our show, and what we've talked about lots on our show too, even though he didn't know we've been talking about this forever. There's been a correction in the broad market, a significant one. And that's why there was two things I put in my long-term portfolio: XBI and IWM. And I indexed because I didn't want to pick on the individual stocks. And I just felt like, we've come off significantly on some of this. It's a 10, 15. And in the case of XBI, it's a 30% correction. I feel like, and those were the ones that rebounded the most on Friday. So again, looking at XBI, I'd absolutely be buying the pullback in XBI here. I already did. I did it 2 days ago. I got in at 108. I got near the bottom, so 114. But that's in the long term. So I put two things in my long-term retirement account. I put XBI and IWM. So that's what I'm looking at. I'm not looking at SPY, and that's a little bit of diversification too, because we know I'm heavy in mega caps, and that's heavy SPY. So I'm like overweighted there. So I was like kind of a little bit of reweighting too. So after selling some stuff, some of my mega cap stuff, not that I sold at Apples or Amazons, but I've raised some cash. I was looking to put it to work in some of this, a little bit more diversified stuff, as opposed to going and buying SPY here right now, saying that comes back the most. And SPY is still my biggest holding. Don't kid yourself. I'm still holding on to it and not selling and not getting out. But it's just a matter of a little more diversification, because we know we're so heavy in Apple when we're in SPY.
All right, I have one more stock from this trend, and then we can move on here. But
sure.
AMC, wrong day Friday. Down this morning with the rest of the market. From
a technical perspective, you'd be buying this dip, I think, but there's not much of a dip. And again, if you're going to stop out, you got to go Friday's low. You're going down to 23.65. You're risking $5. From a long-term perspective, I think it's not worth what it's at. So I'm not going to ever put this in my long-term account. Maybe at $5 or $10, but it's still insane to think that it's worth $28. But the market doesn't care. The market has not cared about valuation on this for a long time. Technically, it actually was a really good day for it. So I think you would be buying the pullback from a trading perspective, but you got to go all the way down to 23. So I'd rather buy the dip at 25 as opposed to 23. And then if it dips all the way down to 25, do I even really want it? So I don't think there's a setup here at all.
I'm just looking at this real quick. It just bases the pre-market trading since the 4 a.m. You had
Yeah.
a little nervousness, off that 4 a.m. open, but someone has a little appetite here at 28. I don't have a number for you there, but I'm just looking at the 15-minute translating into the hourly.
Yeah.
So and also you got to think that the people that were buying on this big decline. Then you had a couple days where it was moving up, but you could still put your bids out there and got hit. I say now with that it's turned. Like to me, I don't know if it's a permanent turn and it's going back to $40, but that's the biggest green candle it's had on one side. It cleared it, hold it, get back over 30 and you're in business here. But yeah, AMC, I guess that Spider-Man did pretty well then, right?
It did amazing, and let me tell you, it was amazing. I want
you
to know
see
what.
it?
Oh, it was so good. Oh, it was good.
I heard Dana and Garrett saw it. I won't spoil it for
Oh,
you
it was good.
guys.
Yeah.
I heard what kind of what they did in it. So
I'll be. You know what? I'm gonna say this now. If I see any spoilers in the chat, I'll be dropping the ban hammer. Okay, no spoilers in chat. But seriously, if you're into this sort of thing, go watch the movie. It was incredible.
I'll go see it.
I don't think we can in Ontario. I think they're shutting those down too.
Oh,
but
that sucks.
it sounds like fun.
All right. Let's move on to stocks that are actually trading higher this morning. Besides Zoom, you basically have one group of leaders here, and that is your vaccine stocks. Your Novavax, your Ocugen, your Moderna, which had some data out this morning saying that their variant was pretty good. Their vaccine was pretty good against the variant. Those are your leaders here this morning.
Yeah. It's going to be, and biotech in itself, obviously IBB is going to be up because of Moderna. We know it's a big portion of it. Moderna is now up 21 points here this morning. So I kind of actually looked at this one a week ago when it was starting to when it really got hammered that one day, and you were wondering if that was just getting overdone. It seems like this gets overdone. It's a buy, and it was. I did not participate in that one, but it got down to 233 again. The reason I was looking at it was because that's about where I bought it the first time, and I sold up at 379. I was like, I could rebuy this, and man, I would have been a genius if I would have, Joel, because it's already back up at 316. I think if you're coming in Moderna now, you're way, 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 way late to the party. I think it just had the rally. I think you had to be looking at it a week ago and it was 250, 260, and now it's 316. I actually think this is the selling opportunity in Moderna today.
Ooh,
so if you're buying it today, I'd be going directly against you. I think it's a selling opportunity today.
Ooh, take a look. I'll tell you for you. We've hit 320. I like that number. They just gave it to you in the pre-market, right? You just hit it up almost $22. The reason I like it so much is when it came down off that 370 high in that gap fill. It had 2 days where it just kind of paused, like, hey, we're going to go back up to 350. And on those 2 days, we hit 318.47 and 318.79. Now you got a double top on the dailies coinciding with the pre-market high. I mean, that's just a great level. If they bust it to 320, get your cap on. Here we go. If they can't get it to that 320, come back. Top of the yesterday's range is way down there at 296.39. But when this was coming down, I remember I gave a zone. Maybe it was a little bit lower. I think maybe 220 to 240. It looked like the zone because that's where you had your true buyers, right? Before you were chasing it. So for you Moderna traders, I want to see it over 320 for you, and you got some nice room to the upside.
And then Joel, you're being asked for your thoughts on BNTX while you're at it.
BNTX, I haven't looked at that one, but we will.
I got the same thing. I think it's a selling opportunity now. 300's huge, psychological, broke down. 295. It's actually a nice setup to short. And I'm not in, we don't do recommendations, but I would say I'm actually not a fan of buying this whatsoever.
This one, I'll give you your next daily 299, 300. You haven't hit that yet. That's big. But if you do get a pullback on this to maybe the 288, 289, well, you're not going to see it. That's way down there because it did break out a triple top area. But that would be the support. Above 299, I think if you can get through there, I think you got some room to work your way into the 300 handles. So that's a look at BNTX, and I gotta check Pfizer. I own Pfizer.
It goes up every day.
It does.
Yeah, it seems like it goes up every day. I still think it's a selling opportunity. I own Pfizer right along with you. I'm not selling it. My average cost base is 14. I'm not paying the tax on it. But if I had it on for a trade, I would ring the register. I think it's overbought. I said that 3 days ago. That one was 58. Now it's 60. So
I'm pretty sure you said that last week.
still overbought.
I know.
Stocks get more overbought. I guess you should just be trailing up the stops instead of flat.
I got in this thing late, and I thought it was late. It was like 42, 43, so it got a little bit
pretty
higher
good.
cost basis, but pair of highs in Pfizer, we're not quite there yet. And there might be some size at 61.50. Your all-time high 61.43. That was made on Thursday. All-time closing high 61.25. So good zone there for today. If the rally continues in Pfizer, potential resistance, and support at the close at 59.48.
What about buying General Motors? I'm out. I sold my General Motors. We know I sold it, and I want to get
General
it back.
Motors.
It's way lower than where I sold it. I think I sold it at 58 or 59. It's 53 here again. I got that low of the move, 53.60, October 29th. It could bounce there. It's so weak and broken now, though, is the problem. But just looking at it from a longer-term perspective, you know, they really hammered it after they lost the person who was in charge of their autonomous unit, and obviously the market sees that as a serious setback. I don't know how serious the setback really is, though. I'm wondering at a certain point, like if this gets down to 50, I'm absolutely going to buy it. I'm not sure if I'm early, though.
Did they ever give a reason for that? I mean, because they just booted.
Yes.
Did they?
Let me guess. Let me guess. Sexual harassment.
No.
Joel. No, he didn't get fired. He left.
Well, when you're at that level, it's a it's a mutual agreement to leave. Put it that way. But no, Bloomberg had a story over the weekend with a bunch of details. Basically, what it came down to is a differing of opinions of the future of cruise, right? As far as where to focus and when to IPO, right? Or potentially IPO. It looked like Mary Barra and GM wanted for the cruise unit to focus more on the luxury cars and self-driving Cadillacs and that sort of thing. And what was the guy's name? Dan Amon. He wanted to focus more on the like robo taxi side, and they also differed on their timeline as far as when they would potentially IPO the unit. So when you're at that level, you get fired, but you resign. It's a mutual agreement.
Okay.
So
they hammered the stock on him, though.
No, they did.
The market liked this guy. Obviously liked this guy a lot because they really hammered it. I think General Motors is just so cheap. And you go wrong here when you're trying to catch the falling knife. So you probably should stop and not buy it as you're trying to catch the falling knife, and you should probably wait. Sometimes I do a half-size position when I just don't want to miss it altogether, which maybe not a bad case here. But yes, I believe the GM story is still intact. Yes, I believe GM is going to be a big player in not only EV but autonomous still. Lots of smart people work at General Motors, and I still think if you're buying a 53 and you're looking at it a year from now, you're going to be happy. But with that being said, the stock's going straight down, so you're trying to catch a falling knife.
You're as far as on a monthly basis, I mean, you're hanging in there. You are taking out the low from last month at 54.51. Your current low, which was made on Friday, now you're under 50. I'd say two areas. Like if you want to take a stab here, it looks like you got to give it to 52. But I think this is where the area between 52 and 54, if we could start, looking to the right instead of the left, keep coming down, and put a couple lows in at 52, 57, 52.72, stabilize, have a couple inside days, and then get some good news or a rip-roaring rally. But it's a buy zone. I don't think I'd want to be shorting it down here, $1.28.
No, and it's sold off. And again, this is where I'm looking, from the longer term perspective. It's like, okay, well, what has this kind of been? And obviously this was its, own animal where we lost that exec. But I kind of think that was overdone. And then, you look at the overall market hammering here again. Is it just giving me that good opportunity to get in one of these names that I had and, and obviously sold at a good price and getting it back, cheaper here? I think it is. I like the GM here.
All right. Hey, real fast before we bring Tim on, I wanted to bring your attention to solar stocks today. They are all trading down on the news from yesterday that it appears Biden's Build Back Better plan may be dead in the water. There was a lot. There was a lot of incentives in that bill for solar self-driving cars, solar panels, a lot of green incentives that may appear to be going out the window now, potentially, sort of, kind of, who actually knows. But regardless, every solar stock and stock related to solar is trading down with it. So EV stocks, solar stocks, all down this morning off of that headline. Off. Without exception.
It's so hard to follow these.
What's going on
out here?
Yeah.
Is that me?
Okay.
No,
Okay.
You're good now.
They're voting it in and voting it out. They're voting it in. They're voting it out. I would just say there has been monthly support in this 75 area, 74.88, 75.56, currently trading at 75. The problem is, if it doesn't hold here, then really there's nowhere to go except around the $70 area, and that was a low that you had back in May. So let's look at TAN. I'm not looking at the individual stocks yet.
I have SunPower still, where I kept a little piece from the long-term portfolio that bought at $6. I still have a little small piece of it. I don't know. The 20 is huge though, so you're getting it right back at support here again. So if you wanted to take a really tight stop, I mean, and no risk, like there is risk obviously, but a low risk, tight stop. The low of the move on Friday was 20.08. We're 20.14. We're 6 cents off the low. So you're probably going to get stopped out. Could you get a Gil Morales undercut and rally here? You might. I mean, obviously it's bad news in the sector. It's always kind of tough to buy bad news on a bad day. You could really get hammered that way. So I'd say, maybe give it a little bit under 20, but if you are taking a shot here, I have a tight leash.
All right, it is Monday morning, and you guys know what that means. Tim Quast, founder and CEO, Market Structure Edge, joining us now. Tim, how was your weekend?
Spencer, what I despise, can you hear me all right?
Yeah, we hear you.
Is it good? Okay, good. What I despise is when the weekend comes along and interrupts my work. That's just really frustrating.
Tough life, Tim.
He doesn't like
I'm
the
well,
weekends.
thank you. Good to see you guys. Happy Monday to you.
Tough life. All right, so let's start with this. We haven't really talked about all the crazy action that happened on Friday's close yet, between the options expiration, between the Nasdaq rebalance. I want to get your high level thoughts on how that played out, and how all of last week played out, because you were actually spot on the money with calling for volatility here. So I would like your take on last week, and then we can look forward to this week.
Thank you. So I appreciate you mentioning that. Yeah, I expected that the market would be down Monday and Tuesday. This is what happens into an expirations week. And then everybody talks about the wrong stuff. Oh, it's Omicron. It's this thing. It's that thing. Then the market zooms, heading into the index options expirations. So you get a good Wednesday. Then you find out where money is when things reset with options expirations. So Thursday was index options expirations, and it's our only European style instrument in the US market. And that's a date certain instrument. The rest of them, and you guys know this who trade options, the rest of them can be used at any time. So that's the only one that trades at a set point. So it gives you a very good read on international money in US stocks, and the market was down. So you have some cut to exposure to US equities. Then on Friday, you have this, crazy volatility. And I went out on a limb and said, well, the Nasdaq could actually close up. It didn't, but it was close. And it tells you really what happened. I noted this in my note to you, Spencer, that it had the largest behavioral volatility of 2021, which means there was more movement in all the pieces than any other day of the year so far. In fact, you have to go back to December 28th last year to find something similar. So traders, let me explain that to you. What that means is the stock market isn't just doing what you hear on CNBC, reacting to Omicron, or it's now the reopen trade, or it's the work from home trade. That's not how the market works. There are the machines that set prices. There are trades tied to derivatives. There are trillions of dollars of those. There's passive money. That's the stuff that's going on. And it reset on Friday. And the biggest thing to me was that there was a colossal drop in demand from passive money. And if that doesn't improve over the next number of days, we're going to be in trouble. And I told the Edge subscribers today in the market desk note, I said, okay, so today, new options trade. And so this will be a great read. If people come back and renew their derivatives positions at better, lower prices, we're going to be in great shape. If they don't, we're going to get pounded. And the futures don't necessarily mean what will happen. We are going to see how that unfolds. But that's your read on what's going on. I think those things are so important. I talk about this all the time to Edge subscribers. It's one of the big things that you have to be aware of. You're taking big chances when you trade during options expirations because you never know what's going to happen.
It's a fantastic point you're making, Tim, and we see this play out again and again on the Mondays following a big expiration, because I always talk about like the release, where you have the options, the pinning, that's all pressure, and all of a sudden all of a sudden you lose the liquidity from all those options expiring, and then you actually have a big move in one direction or the other the following Monday, and everybody sometimes is like, what happened? But the liquidity is not there. So it's kind of like the perfect storm we had over the weekend here, where we lose the liquidity from those options expiring on obviously on options expiration Friday, and now you have the bad headlines where Omicron's obviously spreading with some sporting events going down, so you start seeing that go down, and people wanting to get out, and the liquidity isn't as strong as it would have been last week because those options are off the board. So it makes for an interesting trading, and makes for more volatile trading here. What are your thoughts? What's the market structure saying now? I mean, now you came on last week, you're absolutely correct to be cautious. Are you still remaining cautious here, or is there anything that gives us a glimmer of hope that Santa Claus might still come to town?
Well, you never know. The math says that the probability of additional gains has diminished, and I'll show you what I mean by that. So in times like those, we tell folks who use Edge that you want to be in, I call them fives. You want to be in fives where the supply is limited. That's the stuff you want to be in when the market is uncertain, because it's most likely to either preserve your cash or give you maybe a little return on it. And you want to avoid the things that are going to be volatile. And it's very apparent in the supply-demand balance. So let me show you here. And I'm going to break a little news as well, because we
like breaking news. Give us wait.
Get Spencer. Come on, Spencer.
All right. What do we got?
So we have some new stuff that we are testing on Edge. So I can give you both here. I can answer your question, Dennis, and break this news at the same time.
I like that.
So here's broad market sentiment at 6.8. You can run the math on this. We can anyway. Internally, we will go say, well, what are say back to 2017? So we go back to 2017 and run the data forward. What are the cumulative gains in the stock market when broad sentiment is 6.8, a negative 1.6%? So it tells us that the probability of that doesn't mean it doesn't happen. It just means that if you add all the times up, you're likely to lose money rather than make it. So if you want the gains in the market, you want to own it when it's above 5. Almost 98% of the gains in the market come when the market is above 5 and rising. When it peaks and begins to fall, you want to leave. So these maths say that's not great. There can be exceptions, and those would occur during year-end window dressing. I'm going to show you one thing, but here's what you can do. So here's the breaking news. So we've added these capabilities, and if you want to try this, go to marketstructureedge.com. We haven't released them, but we will this week. So I'm testing them. So here's what you should own. In times like this, when you have no idea which way the market's going to go, what you want to do is say, let's go to fives that have been there for 30 days. So that's what I'm doing. I'm saying, let's go find stocks that are at 5 out on a 10-point scale for at least 30 days, and where short volume is less than the market. So we're going to say less than 45%. Believe it or not, the S&P 500 is 45% short, but that's the supply line. It's the supply chain. Okay, so now if we filter for that, here's the kind of stuff that you want to own. You want to own, like EQ, AMH, American Homes for Rent. Look at that. So the supply side is basically dead level below 40, and the demand side is dead level. So what's the stock do? Well, it hangs right around. You can actually get some gains in that. Same with EQR, equity residential. Great Sam Zell company. So once again, here you have a supply side that's very level, starting to trend up. So maybe there aren't many gains left there, but it's a 5. So that's the stuff you want to own. You don't want to own look, we could look at SunPower. Why would you be very cautious about SunPower right now? Well, look at the supply-demand balance. The supply-demand balance in SunPower is the opposite of what you want. So it's on the floor, but the supply side's still rising. So when you have rising supply and no demand, prices fall. You want to have the opposite condition. So what's the broad market going to do? Unless this passive money comes back this week. We have new options trading today. Counterparties true up their books tomorrow. Wednesday are VIX expirations. Thursday's reality, and Friday the market's closed. It is a messy week, but we'll see. If we get passive money coming back, maybe we're okay, Dennis.
Tim, what about this idea that flows follow performance? We were talking about last week, I think it was Thursday or Friday. I brought up a chart of the flows into the ARK funds and how they peaked in December of last year, the inflows. I've gotten this idea that obviously anyone who follows, the fund flows knows that it's been a record year for inflows into U.S. stock funds. That means mostly ETFs, but also some mutual funds, right? Yeah. Yep. So it's already been a record year, and the year's not over, right? In terms of amount of money that has flown into U.S. stock ETFs. What about this idea that that money is just chasing the past performance, and that, granted, this is not the first record. This is like the third or fourth year in a row that we've had a record, it seems like. But what about this idea that all these inflows is just another sign of people chasing past performance, and a maybe potentially a topping indicator?
Well, certainly the answer to your first question is this: people chasing past performance. Of course, it's the it's the oldest pursuit in the capital markets, that you chase past performance. Whether it's an indication of a top or not, I would say it reflects the surfeit of money that exists on the planet. There is the fact that you have central banks. This is monetary policy, so I'm not going to bog down in it because it clears a room, right? It clears a room.
Thank you.
But that money will coalesce around capital markets. So if it doesn't help the poor, it flows to the people who can deploy it. And so that, to me, is what it reflects. The risk, if you want to talk about the risks in this, what ETFs do is expand access to the same stuff. They don't create more stuff. It's not like an IPO where a company issues stock and now we have more product to consume. ETFs depend on the same underlying stocks that everybody else does. They just enable money to track alongside that same stuff. And they create an almost infinite capacity for money to have exposure to those assets. Well, the problem with that is, what if it stops? It goes back, one of my favorite phrases. I've used it over and over on Benzinga PreMarket Prep. Herb Stein's law. Ben Stein's dad, Herb Stein, an economist. He said, if something cannot last forever, it will stop. It's a funny line, but the problem is what happens to us when that stops. I think it is a big risk. It's why other than to trade them, I avoid ETFs. They're derivatives, and they do a great job of increasing exposure to the equity market. But when it comes time for things to contract, it's going to create risk, no question.
Okay, that's about as good as answer, I think, as one can give, because obviously no one knows the future here. But I've got this idea in my head now that I don't know, $1 trillion of inflows is what we've had this year into specifically United States stock funds. That's not all funds. That's just ETFs that give exposure to the U.S. stock market. And $1 trillion is just, it's a lot of money, man. I don't know. It just seems like all those inflows have to have to be a sign of something, but maybe it's not a sign. Maybe I'm just looking for a sign. I don't know. But
So,
Well,
Tim, I just got one thing for Tim here.
Okay.
So, we had the unwind, right? We had the quad witch, and I always look for these to be, turning points in the market, whether continuation of trend or a key reversal here. So, going a little bit shorter term, I know this is a synthetic Tuesday here. What you'd be looking for is we better get our footing in the next couple days, right? Or else or you're looking for another major leg lower. Is that would that be a safe assumption?
Yes, it would be because of this. And if I don't forget, let's take a look at Fangs, because the supply demand balance in the Fangs is crucial. It's crucial to the support of the market.
No doubt.
Here is a 30-day view of broad market sentiment. Again, this is a compilation of the 500 stocks comprising the S&P 500 averaged, and then compared to SPY as our price proxy. So here's SPY, and it's been very volatile. And sentiment was only volatile back here. It really hasn't been volatile. It bottomed here, and the market moved faster than sentiment. And will it again? It's possible. But this is a top. Generally a top will give us a signal of a coming downturn. The question is, will we have a recovery because some of this money comes back and then the market falls apart? I'm not saying that's going to happen. I realize that there are all kinds of pundits. The guy from JP Morgan, Kolonovich, I think he's a very bright fella. He thinks we're going to get a short squeeze. There are multiple parties who are expecting a big move to finish the year. And maybe it happens. But almost never does the market go higher when sentiment is 6.8. Mathematically, I can look back over the entire data set, and it's very rare. Now, it doesn't mean it can't happen.
Why is sentiment so high right now on your indicators? Because you look at other indicators out there, and sentiment's very low right now. So it's just like I find that interesting that your sentiment indicators are different than what else is out there. I'm just curious.
Yep. They are, because ours is the only market structure sentiment reading in the market. Everybody else uses something else. And our measure is impervious to price. It is really all about the movement of behavior and how those affect price, yes. But we're not metering price to determine sentiment. We're metering the rolling change in the market. So if the rolling change in the market, this was heavily derivatives driven. We say that when the market recovers faster than sentiment, it is evidence of a lot of leverage using derivatives. Now, did that work? I don't know. Did people make money, or is this another March 2021 where Archegos Capital blew up? It's possible. I'm not saying it is. I'm saying there is some evidence that could be a risk. But that's why our reading is different, Dennis. We're going to calibrate the movement of people chasing story, people chasing characteristics, people chasing price, and people chasing derivatives, and how those things move in comparison to each other. And the biggest one is price. That's 54% of all market volume. And so that's a very short-term event. So if the rest of the stuff goes down and that goes up, we can get a very strong movement in sentiment, but it is not sustainable. So we'll see.
All right. Tim Quast is the founder of Market Structure Heads. Yeah.
One last thing I want to share this with you, because
all right.
I think this is important. Fangs. The Fangs are the engine of the market. And here's why the market has struggled. Look at the Fang supply and demand balance. Here's demand. It just barely got back to 5, and then it turned down. And the supply side has been above the trend. But here's the good news. And I think this is Joel, this is the rest of the answer to your question.
Okay.
If the supply side continues to trend down and the Fangs recover, we're going to be okay. And that is possible. I look at the Fangs and say, that ain't bad. So that's our ace in the hole, and we better hope it gets played.
All right. Tim Quast is the
Thanks,
founder
Tim.
of Market Structure
Good to
Edge.
see you.
Link in description. Tim, always a pleasure. Have a good one.
Back at you guys.
All righty. Hey, we got 5 minutes left. Drop your tickers in the chat. We'll take a look-see. Okay, the first one that I see is Shopify, so we'll go there for Florida. He was reading my mind there. Shopify.
Shopify. Wow.
Yeah.
That stock is the only tech stock in Canada, as Dennis likes to call
It's
it.
the big one. It's the big Canadian tech stock for sure. I think Friday's low. I think that's what's
Look at that
challenged
whole,
right now.
Mhm.
Well, if you're buying at 1,300 here, which is where it's trading right now, I think you got to stop out on Friday's low, 1280.
I agree. Next year, looking at 1,200.
Oh, nice, quick. I like it. Efficient. What about Roblox? Two people asked about Roblox today. Oh, look at that quad bottom. What is that? Or what is
Triple.
It?
That's a setup. Look at you,
Yeah,
Spencer.
it's way down 93 though.
Yeah,
That's the only problem. We're too far away. We need to see that on
Ah.
Friday. Why didn't we talk Roblox on Friday?
Yeah,
We were
come
talking
on,
about
guys.
two potential lows and a potential for a triple bottom there. So
No,
yeah,
but
it's a good setup.
it.
You know, I think I would be buying the pullback on it. I don't 99, 93 because again, looking at the risk at $6, it's quite a ways to go.
And how about? I mean, you had the two lows there after the gap up too, so it's a quintuplet bottom there. Look at that.
Quintuple.
Quintuple. What is it?
Is it quintuple?
Where's our linguist today to correct our?
Quintuplet. Quintuplet? I don't know. Hey, what about a firm? That one's also got a bunch.
What about Aladar?
I don't get that reference. What's the firm's got a bunch of lows in the same area?
Come on, you know who Aladar was.
No,
Aladar, a firm beat Aladar in all three of the Triple Crown races.
Oh, okay. I apologize.
Yeah,
Apologies.
Yep. I don't know, Dennis.
I got trade on it. I'm not going to talk
it. Breaking down new low of the move.
I've got a trade on it, so I won't talk it.
Okay, it's breaking down new low of the
it.
move. Not sure what the news is. Pre-market low just above 93, so you want to see that hold. My retracement is no longer valid. I don't know what I had that on there for, but that's not in favor. Give it back. Giving some back. Those lows at 93 are above the lows from Thursday and Friday, so you do have a double bottom there. Support 92, 93.
Chat's throwing out all the growth names, and you know what? The same thing applies to almost every single one of these. I'm looking at these trades and stopping myself out on Friday's low. I see Palantir in their PLTR. It's a nice pullback. You got your defined risk down to 1781. Would I be buying the pullback and trying it? Maybe. I actually might try some of these off the open. I may try some of them after the show here too. There's some decent setups here. Okay. So you're getting a dip buy on stocks that had reversal days on Friday. A lot of these, I think all of these Kathy names apply. I think I'd be looking at buying the dip on all these names.
Okay, so then let's move away from those types.
Again, stopping out on Friday's low.
So then let's move away from that. Move on to.
I like it though. It's good to reiterate it though.
Right. Sure.
This is where Dennis gets all his winning trades. I mean,
I wasn't looking at all this stuff. I do. Do you talk on the show that the ticker time comes like, oh, I like that setup. I write it down and then I take the trade sometimes. After the show.
Okay, so what about like an AT&T though? And by the way, Joel, AT&T was mentioned as one of the top picks at Barron's for next year. I don't know if you saw that, but that was last week.
Yeah. You know what? The divvy is still, and I read that, and I read it quickly. I think the dividend is still going to be 6% after everything's said and done.
I thought they're cutting it in half.
Maybe.
My understanding they were cutting it in half, which would take
but now with with the price coming down so much,
right? The price has come down so much here. It's a good point. So maybe it has come down enough that still.
I don't know. Morgan Stanley
upgraded today too.
Again.
Is that why it's higher? I
upgraded today. I don't remember who it was, but definitely got upgraded.
It was Barclays overweight, $30 price tag.
Morgan
people
Stanley.
all want to be heroes and buy the dip on AT&T.
Yeah,
I tell you, there's been a lot of people trying to be the hero and buy the dip on AT&T, and for the most part, it's usually better to sell the rip. This thing's was ripped $2 off the lows. It's up 10% in 3 days. Not buying it up here.
You think you'll fill the gap? I mean, you
could go to 25, maybe. I think you'll struggle there.
No, I mean on the downside, though. I mean, I think it's going to thicken.
I think there's a likelihood that it eventually does.
Yeah. Okay, that's an interesting one.
Company that is struggling, company that is maybe too big, company that is cutting its dividend imminently here, company that is getting some love because market's playing defense.
Defense, yeah.
Defense.
Hey, how about your Lions, Dennis? Did you
know,
predict?
wow.
Do you predict that win over the Card?
I tell you, they're back here, man. If there was more of a season, if the season was a little longer, maybe they can make the playoffs.
Buy the dip in the Lions. Buy the dip in the Lions.
Buy the tip in the Lions. The
All right,
Lions
guys,
are hot
I'm
now.
gonna
Well,
let
you
you
know when
guys.
it started? It started
the
when
dip.
they didn't lose 2 weeks in a row. They tied the game, and then they had the bye week. It's like the Lions haven't lost in 3 weeks when they were coming in that last game. And then obviously, they did lose the next one, but then they won. And now you know what? They're hot. They're hot. The Lions are hot.
If they win one more, you know what that's called? That's called a winning streak.
Yeah.
No,
All right, I'm gonna let you guys take from here. Hey, listen,
Detroit Lions fans don't know what a winning streak is.
listen. I got the Breadster coming on with me,
Ooh,
and
nice,
you know what
Breadster.
he's going to talk about? Tips for holiday trading.
I like that.
Holiday trading.
Trading in a low volume market. That's what it'll be with the Breadster coming
like
up.
that.
So, all right, I'll catch you guys later on.
All right, catch you later, Joel. Dennis, have a great rest of your day. I got to go as well because we got to go to live trading with Benzinga. Myself, Ryan, Zunaid, taking you guys through the open and then some. So, on that note, please remember all the information from today's show, from all of our shows, every show on every channel that we have, is meant to be used as informational purposes, not for investing or trading advice. Thanks to our guest, Tim Quast. Thanks to all of you in our chat. We made it through the morning. I thought it got a little bit hairy there in the chat. I thought we were going to veer into crazy territory, but you guys reined it in. I appreciate that. So thanks to all of you in our chat. If you could hit that like button, I'd appreciate that because we don't have as many likes as I would like today. We're at 224. Oh, can we get to 500 likes? That's not a lot. It's not asking a lot. I don't think it's asking a lot. I appreciate all of you. I will see you over on our next show. The stream will end and redirect right to that, and we'll be starting at around 9:05 Eastern time. So stay tuned for that. If we missed a ticker of yours, I apologize. You can drop it in that chat. We will do our best to take a look during the next show. The pro.benzinga.com, guys, free 2-week trial. Check it out. And the show is a podcast. Did you know that? We're on all the major podcast platforms, Spotify, iTunes, etc., etc., etc. Check us out there as well. Tell your friends. All right, that's a wrap. Catch you guys over on live trading with Benzinga.